Um, yeah. Oh, the other thing to notice is I was looking at China's market, and China was closed a few days last week, but it was open on Friday, well Thursday night into Friday, and China. If you look at this chart, this looks like it's heading lower. And as you see here, that this big red candle here, and you're only 20 some odd points away from a new low, and it looks like it is going to make a new low. So you had a this is very bearish too, because the U.S. steel stock, a lot of steel, oil, commodity stocks are looking very weak, and they're looking basically the dry shipping index has been going down, the Baltic Dry Index, which is basically signaling that retail in this country is slowing down big time. And being that retail is 2/3 of the economy, this does not bode well for a stock market bounce. And that's why I'm saying that there's a top in the market, and I have an easy get out point, like I said, maybe 13, 14 points above Friday's close. So I think at this point in time, it's a good trade to buy the puts, and if it starts heading down, number one, it's going. The next time it comes down to the 104 area on the SPY, I believe that's going to crack no problem. And when that does crack, there's going to be a lot more downside. I mean, you're probably going to head into the 90 area, like I said, which would be 900 on the SPX. That's the area where I would look before you get another bounce. So I'm looking at a lot of these world market charts, and they're all looking like they're ready to roll over. You got the Chinese market right here has just had a very weak bounce, and now it looks like there is no triple bottom, as you see here. It's coming down for the third time, and it looks like it's just using the 18-day as resistance, and then it's ready to head to newer fresh lows, which, like I said, is very bad, because China's been the driver of a lot of this so-called recovery. So, and as you see here, the Hang Seng Index too, you're overbought. This is $HSI. If you want to look, you're up here against the Bollinger Band. You pulled back. You're above the 18, but you have some considerable resistance, which you touched right here at the 10,100 level. You touched that. You retreated. Now you're overbought. The MACD is still below zero. So I mean, this chart does not look extremely promising. The RSI, you've bounced into the 50 area, which is basically still jives with that we're in a bearish environment. So that market, actually that does. I'm sorry, this is the Nikkei, index, not the Hang Seng. This is the FTSE, the $FTSE, and we, same thing. We bounced up to the 5,300 area. We're now overbought, and the MACD histogram is flattening out. It hasn't yet ticked down, but if you get a down day Monday, you can just tick down. You're overbought here. It's not generally just these markets. These charts do not look extremely promising. They all look like they're putting in some variation of a head and shoulders, and when they come down again, you're gonna, like I said, you're gonna take the target of the neckline break and subtract it from the difference here, and that's going to be a big drop. So basically, you're talking about 4,200 roughly on the $FTSE chart. I am going to talk a little about the gold. I took out of it, but I still have this market on my radar, and it just keeps making, like I said, keeps making higher highs, higher lows. I don't want to short this market by any means. It may pull back a little bit from here, but the reason why I was getting a little hesitant is because, I don't know if you could see, you could see this Thursday's candle. You pulled up to this level where it's pulled up to a couple times before, and just like there is no triple bottom, there isn't a triple top either. It was a resistance area. I thought maybe we might pull back on Friday. Maybe I'd get involved again, but I wanted to see how it reacted, I guess, and it went to new highs. We're now we're under the Bollinger Band barely, but we're riding the Bollinger Band up, and it looks like you could get a continued upside in this market. The MACD is crossed over, but you're getting in overbought territory too, so it's a little bit dangerous right now. But what I probably should have done is taken half off the table and then let the other half ride. This was also a longer term call. I had options for September, so I could have allowed myself a little more time. There's nothing bearish in this market. Basically, I might with any free funds that I have, I may look to get long on a pullback. I would like to see how it's going to react with a market sell-off, but I suspect that it will react positively, because it's going to mean more troubles for the euro, and it can cause more panic, and it should be used as a safe haven. And here's the silver market, the same thing. You still haven't taken out that area, like I said, in 1975. I was a little worried because I was more heavily long silver stocks because of my PAS position. And you close at 1917. You're still about 60 cents away from really breaking out. And you have the MACD as above zero, but you're overbought and stochastic, and you have a potential negative divergence setting up here. So until you really take out new highs, it's a little dangerous to enter any longs at this point. I mean, it could still run a little bit. Remember, I talked about the Bollinger Bands tightening, and you're going to have big move. Well, we had that big move. I took out a day too early, maybe a little more, because it might run a little on Monday. But sometimes you have to take profits.